Good morning, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the top market events that are currently causing big moves in the markets. So among the key highlights will be the current rally in the Nasdaq, the resumption of the Nikkei 225 index rally, and of course the price action that we are currently observing in JPY pairs. So as always, I would like to begin with a disclaimer that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So with that behind us, I think we can start. Hello and welcome everyone. I can already see Robert Kavari in the house. Thank you for joining and welcome. Derek Kanui, Victor Mutua, Ken Moniki, Dennis Mwangi, good morning. So let's get things started. On the economic calendar front, we don't have much happening. Among the key highlights is the just released inflation report from Switzerland, focusing on the consumer price index, which dropped by negative 0.1%. But of course, there was a key highlight on the yearly number. So the key highlight we saw was that on the year-over-year readings, there was an actual 0.7% increase. This was the same as the forecast, but the previous number was 0.6%, indicating a slight increase in year-over-year inflation from 0.6 up to 0.7%. Of course, we saw some market reaction happening on the Swiss franc. So outside of that, there was quite a number of things happening this morning. I think I did an update on these on X. So there was quite a number of updates happening this morning, especially from the People's Bank of China. So one of the updates, China's central bank injected 51.3 billion yuan via the 7-day reverse repos at 1.5%. So what this means is that the People's Bank of China is lending money to banks for a short period, that's about 7 days, at an interest rate of 1.5%. That's a very low interest rate. So this is called a reverse repo. It's a way to increase cash in the banking system to ensure liquidity, meaning banks have enough money to operate smoothly. So while this was happening, the People's Bank of China also did the opposite. So it removed 248 billion yuan in open market operations. So even though the PBOC added some cash into the system, 51.3 billion yuan, it also took out a larger amount, 248 billion yuan, by other means. This suggests a net reduction in liquidity, meaning that there is less money circulating in the financial system overall in China. So as for the offshore yuan, and I mentioned these last week, that when we are looking at the yuan, there's the onshore and the offshore. So in the symbols, we usually have CNH and CNY, CNH as the offshore one, and CNY as the onshore one. So this means that there is a different, usually different rates between the Chinese yuan, whether it's in China or outside China. So the value of China's currency yuan traded outside of mainland China, or what we call the offshore yuan, has dropped, requiring more than 7.3 yuan to buy $1. This indicates the yuan is losing strength against the dollar, potentially making imports more expensive but exports cheaper. However, judging by the actions of the People's Bank of China this morning, the net effect was basically removing more yuan from liquidity, meaning that they are trying to strengthen the yuan. So China sets yuan midpoint at weakest level since September 11, 2023, that's last year. So the PBOC sets a daily reference rate for the yuan against the dollar called the midpoint. The midpoint is now the lowest or the weakest it has been since September 11, 2023, signaling continued yuan weakness. So China strengthens yuan support, maintains fixing above 7.2 US dollar. So despite the yuan weakening, the People's Bank of China is taking steps to stabilize it by keeping the midpoint above 7.2 yuan per US dollar. This shows the central bank is trying to avoid the yuan falling too much and signaling that it values a stable currency. So in conclusion, the updates show that while China is managing liquidity carefully, the yuan is under pressure and the central bank is stepping in to prevent it from depreciating too rapidly. So the other key highlights in the markets this morning, this is from bar chart. Cheap stock rally pushes the SP 500 and Nasdaq 100 to record highs. So yesterday there was quite some good performance from semiconductor stocks. If you look at companies like Applied Materials, up 4.9%, Arkham 4.16%, Tesla 3.46%, and so on. So among the key highlights was SMCI or Supermicro, which rallied by 28.68%, with the index triple Q being up 1.09%. And this led to a big spike in the Nasdaq index. Of course, you might also want to check out ARM Holdings, which was up 4.51%. So that was the main reason that we saw a big spike happening in the Nasdaq, even though other US equity indices were not on the rally yesterday. So back into the economic calendar and trying to understand what might be expected later today. We have quite a number of reports coming in, but the main one will be the JOLTS job openings at 6 p.m., which basically tracks the job advertisements across the US economy. And if there's a higher number of job openings, it means that there are more companies expanding, and it's usually good news for the economy. So in the previous reading, we had 7.44 million job openings, and we are expecting a slight uptick to 7.51 million jobs. So when there's more job openings, it means that companies are expanding, and that's good for the economy, and it doesn't worry the Fed. The opposite is also true. When there's a drop in job openings, in that case, things can get really bad, and the Fed might respond by cutting interest rates in a bid to stimulate the US economy. So in this case, an increase in JOLTS job openings would mean that the Fed could slow down with the rate cuts, and as a result, we could be seeing a strong dollar in the markets. On the other hand, a drop in JOLTS job openings would also imply a much weaker dollar. So as for the Fed rate decision, this is the decision that we're expecting in a couple of days. That should be 15 days from today. This will be the last Fed meeting on the 18th of December. The market is already pricing in a 74.5% probability that the Fed will be cutting rates by 50 basis points, which would push US effective interest rates to between 4.25% and 4.50%. So in that case, there's an overall acceptance that the Fed might go for a 25 basis points cut on the next meeting, and I believe the market is already pricing that in. So outside of that, on the earnings front, we don't have many companies reporting earnings today. Of course, we'll be looking at Bank of Nova Scotia, Core and Main, as well as Donaldson, with the key spotlight being Salesforce. So Salesforce is expected to be reporting earnings today. That should be after market close. And the expectation is $2.45 per share, up 16.1% year over year, on a revenue of $9.4 billion, up 7.2% year over year. So as we have seen with most of these tech and AI companies, we tend to see the market outperforming after market close. So if they report better than expected earnings, remember that will be at 11 p.m. right after the market closes. So the price might spike, and then we find a completely new price on the following trading day, which is tomorrow. So we might be seeing some uptick of the stock, investors trying to buy ahead of the earnings, and then looking to cash out if the stock makes a big jump after the announcement of the earnings. So that will be quite a thing. And other notable earnings that will be reported later in the day include Box, Couchbase, Marvell Technology, Metex Systems, Okta, and Torrid. So outside of that, if you look at the key highlights in the markets today, I'll just try to skim through it. Energy commodities updates, natural gas falls by 0.89%. Of course, that's a huge drop happening just this morning. Natural gas EU, Dutch, up 0.6%. Brent crude oil up 0.3%. This is ahead of the OPEC meeting that's happening on 5th. And crude oil WTI, this is West Texas Intermediate, or basically what you see as US oil on your platform. It's up 0.27% this morning. So Georgia inflation rate at a 4-month high to 1.3%. Swiss inflation rate edges higher, 0.7%. We've already checked that. Hungary GDP contraction matches forecasts. China stocks mixed amid US tech crackdown. Of course, we know that Trump has been promising that he will be very tough with his tariffs, And of course, he is also focusing on the tech sector. So the Shanghai Composite Index rose 0.44% to close at 3379, while the Shenzhen component fell 0.4%. So you can see the mixed reaction on the trading this morning, as the latest US crackdown on China's semiconductor industry weighed on market sentiment. On Monday, the US government imposed export restrictions on 140 Chinese companies to limit Beijing's access to US technology, particularly in the artificial intelligence space. Financial stocks also faced pressure, with expectations that falling interest rates would squeeze insurance returns and banks' profit margins. Meanwhile, China's Politburo skipped a readout of its regular November meeting, fueling speculation that additional stimulus measures could be on the way as the country braces for the return of Donald Trump. Technology and consumer stocks mostly declined, while energy and communication sectors outperformed. Of course, on the Turkey side, inflation rate fell to 47.09%, which is still significantly high, down from 48.58%. Turkish producer inflation eases further, and among that, I don't see any other main highlights. European market set for higher open and so on. So I don't think there's another major highlight that we should be focusing on today. So with that, I believe we can dive straight and look at some technical analysis, try to understand where the markets might be headed next. And hopefully from there, everyone will be able to trade from an informed perspective. Of course, if you have any questions, feel free to raise them in the comment section, and I'll be responding to that as we approach the end of the presentation. So let's jump straight to the MetaTrader 5 trading application. So the chart we have here is USD-CNH, which is a symbol for the offshore yuan trading against the US dollar. And as you can see, since yesterday, there has been quite a sudden rise and followed up with this morning's rally, which hit a new multi-year high. So the last time the market was trading this high, I believe this was, we managed to break above this resistance here. So notice the tail today versus the highest price. This was on July this year. So the last time we had price trading here was all the way back into 2023, and this was in the month of November. So immediately we go to those levels. Of course, the Chinese People's Bank of China decided to intervene, and all we are seeing is the market making a U-turn, or basically reversing from the earlier gains. So now there is that expectation we could be seeing a continued reversal of this trend, especially after the market broke this resistance area here. So there's a good chance we could be seeing the Chinese yuan dropping rather back to levels around 7.2676. So outside of that, it's also important to note that the dollar index has been pretty strong. So clearly, we saw some good rally yesterday, but now we are seeing some form of reversal. So after seeing the dollar index starting the week on a strong foot, today it seems that we are seeing the exact opposite as we approach that point where we expect the Fed to be cutting rates further by 25 basis points. So this is also being affected or felt in other charts. So remember when we saw the double bottom here with the USD against the Swiss franc, we projected that the rally would extend to this area that was yesterday 0.88668. So we go to the target, the market attempted to break and pull back, and this morning tried to move even higher. But then we have seen another double top on the 15 minutes chart, and it seems more likely that as the US dollar weakens, we could be seeing the Swiss franc basically pushing further downwards, in this case, regaining some ground against the dollar, with targets somewhere around the low that we saw yesterday in the afternoon, around 0.88556. So on other major pairs, notice how the pound USD has significantly jumped from this support area. So this is a support area that we saw last week. So yesterday, as the market dropped and found some support around this area, today we are seeing the exact opposite. And now we could be seeing the market going for the high that we saw on Friday last week, around 1.275. So for Euro USD, it seems likely that after we saw this attempted break on this area and the market failing to form higher highs, There was a sharp drop yesterday. As per our analysis, we expected that the market would continue dropping further downwards. Didn't quite get to the target we had projected, so the bottom was in as of this price level, and since then we have seen the market bouncing. Today it's a complete reversal, and now the expectation is that the market extends the rally and at least gets to the Friday's high around 1.05879. So as for the yen pairs, we are seeing a complete reversal. In this case, after experiencing a very strong yen that was pushing prices lower for pound yen among other yen pairs, now we are seeing the market making quite a strong bounce, and we are on the course towards yesterday's high and potentially on the course towards Friday's high. So these are potential targets. So for now, a very short-term target around 191.29 for pound yen and a potential extension to 192.357. So it's a similar thing for USD JPY. So after the big sell-off, including yesterday, today we are seeing some gains right from the bottom we saw yesterday. So potentially we could be seeing the market retesting 150.683 price level. So as for the Nikkei 225 index, we managed to identify a nice bottom on this range. So the market bottomed from here last week, and we expected that the market would extend the rally to a high that we saw last week. So yesterday we analyzed and projected that the market would hit this area. So it hit this area 1 hour past midnight and broke above it. And now what we are seeing is an acceleration of price action towards the previous high. So now the bets are on for the market pushing higher to 40,129 yen per share of the Nikkei 225 index. So as for gold, we witnessed a big sell-off yesterday early in the morning, but the market managed to recover some of the losses and then entered this more of a sideways range. So what we are seeing here is that after midnight, the market has just been making these swings, which makes it synonymous to some form of correction. So it doesn't seem at all as if we have a clear direction in gold. So in this case, I would be more observant of this price action area and wait for some form of breakout in a singular direction. But for now, after the high in afternoon yesterday and the bottom that we saw towards midnight, the market hasn't broken either of those limits. So in this case, the market is literally trapped between 26.51 and a bottom around 26.33. So of course, at some point, you'll be seeing some form of breakout, and that's what we'll be looking for going forward for the rest of the day. The breakout hasn't happened yet, so we remain vigilant and wait for the eventual breakout. So as the market remains trapped in this zone here, if we happen to see a breakout, the targets are easy to identify. Of course, we had the Friday's high at 26.65, and of course, we had yesterday's bottom here at around 26.21. So we could be seeing an extension down or up, depending on market activity. But for now, it seems more of a ranging market. So even the London high has just already been formed, and now we could be seeing the market going for the Asian low around 26.33. So as for Brent oil, we have been stuck in this range for some good time. So clearly, the market has been really struggling to break out of this range. And as we anticipate the next meeting by the OPEC countries, it seems more likely that the market is bouncing from the lower trend line. And as we wait for the fifth, it makes more sense to trade within the range and expect that the market will continue to vary and potentially get to the high we saw on Friday around $73.117 per barrel of oil. And of course, you have to be very careful of yesterday's high. It could also serve as a resistance for the day. So Nasdaq made its big move yesterday. So this is what I was talking about when I said the microchips stocks made a significant rally. And we got to this price action level, and the market almost halted at that area. So we haven't seen much of an activity since then. But now we are entering yet another session where the market has the potential to make a strong rally and hit another high. So of course, the strong resistance is somewhere around 21,232, and there is that potential that the market might extend to that area. So we will be looking for the potential of the market breaking above this area, which could trigger bullish momentum trades. But then also on a smaller time frame, if the market happens to break towards the lower side, then we could be seeing a retest of the previous high, which is around 20,939. So other US equity indices are still in a range. So we discussed the range yesterday on the Dow Jones. So nothing much is happening here. So unless there's a breakout, it doesn't make sense to be looking for trades. For the Russell 2000 index, it's just adjusting our trend line from that trajectory to this one, and the market is still in some form of range or a very thin channel that is not forming any directional movement. So we wait until we have a clear direction. But for now, it seems more of a ranging market. So SP 500 managed to make this rally yesterday. So after pulling back towards the lower trend line, we saw the extension of the rally after the chip stocks showed some good promise. And from the forward chart, you can see we were able to break above the previous high. From the daily time frame, you can see it's a new all-time high. And whenever you see a market trading at new all-time highs, it's usually not a good idea to bet against it, especially if it's a stock market index. So in this case, as the market ranges from midnight to the current price action level, we should be monitoring this resistance area to see if there's a break, which could trigger bullish positions at this level. So we could be looking for positions if the market breaks above that area, which serves us yesterday as well as today's high. So Bitcoin are still pulling back downwards. This is something we had discussed yesterday. So even on the forward chart, you can see that it's a market that is really struggling to form the all-time highs. So clearly from the 1 hour chart, this is what seems to be the repeating theme. So clearly the market is forming lower highs. And of course, after making this impressive recovery over the last 2 weeks, after getting to this area, there was a sudden drop, and now it's not looking so bullish anymore. So we remain vigilant and we keep observing with the trends happening around this area here, with the potential for a quick run towards the support area here. And then a bounce from this area could be a play happening. So let's observe the potential run to around 93.5, then see what happens from there. So outside of that, I don't know if there's anything I missed. Of course, we have the New Zealand USD responding quite positively after the double bottom price formation here. So clearly a very strong run, and there seems to be some form of level here that was acting previously as resistance and now might also be serving as resistance again. So now we are looking at a potential extension of this rally to around 0.59073. So I believe we've covered all the major pairs: gold, oil, USD CAD. Here we are seeing a very weak dollar in the markets, and with the weak dollar, it seems like the market is headed for a previous bottom. Clearly, we are definitely looking to go back to 1.39854 if this rally continues extending downwards. And from the daily time frame, we all remember what was happening here. So it's a market that has really struggled to form higher highs, and it has clearly rejected higher highs given the current resistance levels you are seeing around here. So after breaking above all those areas from the daily time frame, you can see that the market has struggled to maintain the bullish momentum. So every time it tries to go up, there's a pullback. Another attempted rally that was faced with a pullback. And this week we started with a green candlestick, and now we are seeing the market reversing that immediately. From the forward chart, you can see last week's rally being erased, and this week's Monday rally being erased, with a key level support around 1.39776. So these could potentially be playing out today ahead of the non-farm payrolls on Friday. So that's it for today. I'll be checking on the comment section to see if there's any questions, respond as we approach the end. So hello Gitonga, thank you for joining the session. You can see Hondo Media, Ande, thanks for joining. Happy to see you again. Esther Karanja, play, I don't know what that means. John Dongo, good morning. So the last NFP was a sharp drop to 12K, and this is from Wangari Patrick. I'll highlight the question. So the market didn't react violently owing to the hurricanes US was expecting or had already experienced, which impacted the jobs. So this week, the data is most likely be positive spike, and we expect USD to bully the others. So it's more like how much variation do we get between the expectation and the actual data. So if the expectation is much bigger compared to, sorry, if the outcome is much bigger compared to the actual data, now that might cause a move, but the difference in the expected 200K and the previous 12K is most likely already priced in. So we should really be focused on whether there is a big surprise from the expected numbers to what we get. And of course, Thursdays, ADP non-farm payrolls might be a quick guide on what to expect on the official non-farm payrolls on Friday. So a good question from All Sports TV. Is the Asian session the best to trade in? Seems like most important movements are made then. London and New York always seems pretty confusing. It really depends on your approach in the markets and what you focus on. I wouldn't say there is a formula for this. The Asian session could be good for someone and bad for someone else. So it really depends on your approach in the markets. So if it works for you, then focus on it. If it doesn't work, then focus on another session. But it's always good to experiment. Maybe try trading it on your demo for a while. And if you have better returns from other sessions, maybe focus on it. What tools do you use to track them? You can download these from the FXPesa website. Just go to fxpesa.com, sign up for an account, download the MetaTrader 5 trading application for your desktop. And if you're using a smartphone, you can go to your Play Store and look for the Equity Trader by FXPesa. And by equity, I'll type it out. Equity with an I at the end. So I hope you can see this in the comment section. All right, so that's it for the day. Thank you very much, everyone. I see traders in X. What should you follow up in X? X, there's quite a number of good traders that usually post their analysis on X. So you should try and follow them. You can follow FXPesa for our market updates. And we always try to share whenever there is a new breaking updates in the market. And of course, if there is new events coming up, we also share. For instance, on this Friday, we should be having a big event happening in Mombasa. So if you are a trader residing in Mombasa or the environs, then you should be expecting a big event from FXPesa team. And we cover a lot of ground, ranging from trading strategies, market psychology, as well as live analysis. So as we approach the end of the session, remember, if you'd like to register for a trading account, find the links in the description below. And if you're watching this on X, you can find the link from the FXPesa bio. Just go to the FXPesa handle. If you're just beginning to learn, we have a free course available on the FXPesa YouTube channel. It's called the Novice to Pro. Just search Novice to Pro by Rufus Kamau. You'll find it there. And outside of that, I would like to thank everyone for taking your time, for joining in and for participating. I hope to see you on the next session. Remember to like, share, and subscribe. And as always, it's an honor to have you guys on this session. So if this is your first time here, know that we have this session running from Monday to Friday, every day from 11 a.m. So you can set a reminder, and always you'll get some good updates on what's happening in the markets. Thank you.